Good afternoon. Welcome to Midcap Radar. I'm Sonal Pucha. With me is Hurmaz Patakia. Well, for the markets, it's a 54-point uptick on the Nifty. Broader markets are doing well, Hurmaz, but Bank Nifty, after that stellar rally yesterday, is quite muted today. In fact, some profit booking and below that 53,000 mark as well.
HDFC Bank leading the charge on the upside yesterday, leading it on the downside today. So, yeah, we keep an eye out. Today is also the weekly expiry of the Nifty as well. So, some action expected in the last couple of hours. But let's start Midcap Radar with the headlines this afternoon. And record highs continue on Dalal Street. IT and healthcare are the key drivers, even as financials and banks drag. Midcaps are relatively outperforming.
ITD cementation slips more than 7% after the company's promoter shareholders, Italian Thai Development, says it is exploring divestment of its stake in the company.
Skincare brand Kaya surges 10% after striking a deal with Marico, which will now handle the sales and marketing of the Kaya's products outside of Kaya's clinics.
Inox wins gains over 12% after the company eyes a net debt-free status with infusion of 900 crore rupees by the promoter. Management tells CNBC-TV18 they should see interest cost savings of 175 to 200 crore rupees for FY25.
And Masgardok Shipbuilders, it's a record high as the company crosses 1 lakh crore rupees in market capitalization. The stock has more than doubled in 2024 already.
Okay, all right. Those are the top headlines for the Nifty. The support today is coming in from Nifty IT. That index is up about 1.4%. And it's been rotating, right? The supporters of the Nifty so far. It's been very sectoral. Yesterday was Bank Nifty. A few days back it was Reliance. Today we are seeing Nifty IT make a comeback. So that's been the mood of the market so far. Bank Nifty seeing some profit booking as we've been talking about. The CPSE index is doing really well today. So a lot of these PSU names are surging in trade. There's no real press news release that has come by, but most of them are seeing a surge. What is not doing so well? It's the financial space again, and media space, which has been surging of late, has also seen some profit booking. So it's really very sectoral today, very stock-specific moves.
It's a tag team match. Yeah. It's one index is leading the charge, the other one taking a bit of a break. But I would pull up the Nifty PSE index, not the CPSE, but the Nifty PSE index, and that is the one that you need to keep an eye out for, because 11,353 was the level, that the high that it made on the 3rd of June, and it has still not managed to retest those levels. It's still getting there slowly but steadily. We'll keep an eye out on the PSE index, but there are plenty of movers in the broader markets, and Nigel is joining in to take us through all of these. Nigel, good afternoon.
Well, good afternoon. Plenty of action actually from the broader markets. IFB Agro, that's one of the stocks that's locked up with gain closer around 20%. So big move is what we're seeing out there. And from the pharma space, AstraZeneca has moved on high on very, very large volumes, and that move has particularly come in the last 1 hour or so. The other management that joined in here on CNBC-TV18 was Inox Wind, and they're sounding quite optimistic about things going ahead. That stock is up closer around 10%. AGI Greenpack, well, we had a note coming in from a brokerage firm earlier this week, and that's clearly reacting to that. That's up closer around 11% as we speak. So those are some of the top gainers, up anything between 10 to around 20% odd. Few more names. Prime Focus, one of those underperformers. Second day running, the stock is doing well. I think for this week itself, the stock is up more than 25%. Sunflag Iron as well, they're going to be putting more amount of money into Lloyd's metal. Well, for the time being, that stock, that Street has taken that positively. That's up closer around 9.5%. Monte Carlo as well is up close to around 8% as we speak. Goldium is another stock that's moving on very, very large volumes, up close to around 9%. And Nelco, it's seeing a bit of an up move, and that move has started at around 11 a.m. today. So that one currently is at the high point of the day. There are a few losers, though. The biggest one is ITD Cementation. We'll try to get you further analysis later on in the show. But that one's down closer around 10%. Stock ran a little bit ahead of itself, and now it's coming for some profit taking. JP Associates, that resolution with regard to their debt is not coming about as per plan. So that's down another 5% odd. And Zen Technology is one of those beautiful stocks that have seen a big, big run in the last 4 years or so. I think the stock is up close to around 10 or 15 times. Well, that one, in fact, is seen some mild profit taking. But for this week itself, I think it's up more than 15%. Back to you.
Oh, wow. After that 10 to 15 times rally, it's just down 3.5% now. But yes, those are some notable movers from the broader markets. Thank you so much, Nigel, for joining us with that list. It's time to welcome Soni Patnaik of JM Financial Services for a technical check on the markets. Soni, good afternoon. Thank you so much for joining us. Well, what's happening with the markets now? What do you suggest? We have the weekly expiry today. Do you think we could consolidate at these levels, or the rally would continue?
Good afternoon, Sonal and Hormaz. Thank you for having me on the show. I think, of course, Nifty was, it was expected to test 24,400 odd levels. It's almost right there. It's wise just to take some profits from current levels and wait. There could be a minor correction towards 100 odd range. So I think that is the level one where one can reinitiate the longs. From current levels, of course, it's in a bit of an overbought zone. So it makes sense to, just book some profits out of Nifty and just wait for the certain sizable dip to come in to reinitiate the longs. Support for this series continues to be very strong at 24,000. So as long as 24,000 does not break, I guess there's no reason to panic as of now. It continues to be a buy and dip sort of a strategy.
Well, I guess the concept of profit booking does not exist for the broader markets. The mid-cap index continues to do well. It's 0.6% higher today as well, as is the small-cap index. But Sony, what are the specific stocks that you're recommending this afternoon?
So, Hormaz, the first would be from the auto space, Eicher Motors. One can buy at current level in futures, keeping a stop loss of 46.60. And a target of 4,800 to 4,820 can be seen. The stock has seen a good bounce back from 4,600 odd support levels, looking quite strong. So there's a short covering expected up to 4,800 plus levels from current level that can be seen. The second stock pick would be from the metal space, Vedanta, which is looking good at a good fresh breakout above 465 in option chain today. So Vedanta futures, one can buy at current level, keeping a stop loss of 465 and a target of 490.
Okay, Sony, these are some individual names. There's a lot happening in the broader markets when it comes to the PSE space as well. Mazagon Dock, Cochin Shipyard, all of these stocks have made a comeback in how they were the first ones to see that impact when the final election results went the other way, actually. What do you suggest? How can one go about these stocks?
I think the entire space is looking quite strong. In fact, they have repicked those momentum and, individual stocks in that particular space, such as Cochin Shipyard, Mazagon, they have given out fresh breakouts for today. So talking specifically about Cochin Shipyard, one can see that the breakout is very strong. It's backed by volumes. It has come today itself above 2460 odd levels. So one can continue to hold the stock, trail the stop loss, of course, to 2460 from where the breakout has come, and a higher target of 2800 can be seen. Apart from these stocks, you can also see from the defense space, HAL, BEL, these stocks have also given significant breakouts today. And, the entire sector, the entire space looks quite positive. Continue to hold. There's a lot of momentum left.
Okay, all right, Sony, thank you so much for joining us. So those are some technical bets and outlook on the market. We'll slip into a break. When we come back, we'll talk to you more on the markets and we'll put focus on ITD cementation as well. It's trading under pressure. We'll get you the analysis on that one. Stay tuned.
Back with us here on Midcap Radar and continuing with this plenty of movers in the broader markets. ITD cementation is one of them. The stock is under pressure today, and as promoter Italian Thai Development Public Company is exploring a potential divestment of its stake. Nigel is here with more details. Nigel.
Well, that's right. The stock is getting clobbered in today's trading session. The news that came yesterday was a bit of a surprise to some because they have announced on the exchanges that the promoter entity, Italian Thai Development Public Company, they're exploring a potential stake of this investment that they have in the Indian listed company ITD Cementation. Give you a few details. They have 46.6% stake at current market price after the 10% drop as well. It's valued at around 4,500 crores. But why is the stock down? There seems to be a lot of pre-positioning that's taken place. In the last 1 month, the stock is up close to around 30%. If you look at it year to date, the stock is up close to around 80%. If you look at it in the last 1 year or so, even after this drop, well, the stock is up close to around 200% or thereabouts. So there's a lot of pre-positioning. So some selling on news is what it is. That's point number one. Point number two, the stake that they have in the Indian listed company is 4,500 crores. Brilliant, right? But their listed entity, which is in Thailand, well, that's market capitalization is only around 800 crores odd. So it seems that they're being a little bit opportunistic out here and going and trying to take some money off the table. And point number three is valuations. The stock has already seen a big run, and in fact, the promoter entity that's in Thailand, they have a huge debt in their books. A couple of $1 billion is what I understand, and they've missed some payments as well. So the the bargaining ability of the promoter to go ahead and get a suitable buyer could be a little bit limited. But out here in India, they've guided for very, very good times. They're talking about 20% revenue growth. They're saying legacy issues are behind, so the margins can go to around 11% approximately. Give and take everything. Last year, they did 270 crores of net profit. Equirus believes they can do 470 crores, or the market capitalization, those around 9,000 crores. So even after this decline, at 9,000 crores market capitalization, keeping in mind that you're looking at the PAT going up by 80%, still it trades at around 20 times, which is not very, very cheap. So all these three factors, a run-up in the stock price, limited power of the promoter entity to bargain for a good deal, and the third factor, valuation is not cheap. It seems it's a bit of seller news on this counter.
Okay, all right. Thank you so much, Nigel, for explaining what's really happening here and why the stock is seeing that big knock after the announcement as well. The other stock which is buzzing but on the upside is Inox Wind. The company eyes to be net debt free with infusion of 900 crore rupee by the promoter. Earlier today, we spoke to Devansh Jain, the executive director of the company. He expects interest cost savings to be around 175 to 200 crore rupees in FY25. Remember, they were around 250 crore rupees in FY24. They add that Inox Green Energy will be, the fundraise will be used for multiple acquisitions. Listen in.
I think in terms of interest cost savings for FY24, our interest costs were about 250 crores. So for this financial year, barring Q1, where obviously we have certain interest costs, we should have overall saving of at least 175 to 200 crores, which will directly go to our bottom line. In terms of term debt, all of these, of course, there are certain timelines within which these need to be paid. We can't prepay some of them, so we are net debt free. Inox Wind clearly will be carrying, now that we become net debt free or say net cash, we will be carrying some amount of cash at all points in time. From a management perspective, we would like to carry at least 2 months of mandatory payments as net cash at all points in time, post which I'm sure the board in its own wisdom will put out a dividend policy, given we have that in many of our listed companies. In terms of Inox Green, yes, that is a net cash entity, and there has been a fairly large fundraise which has been announced over there. While we've mentioned the primary purpose of raising those funds in the objects, but we've really done that to create a war chest, if I may be blunt and short. We've really done that to create a war chest since we're looking at multiple acquisitions.
Inox Wind, one of the outperformers in the broader markets. But shifting focus now to Brigade Enterprises, as the company is planning to develop an 8-acre residential project in Bengaluru. Sonal, tell us more on that.
Well, first up, it is going ahead, expanding in its home market itself. And it is an 8-acre land, which they'll be doing via joint development agreement. Here, the development potential will be around 1.2 million square feet. The company says that the gross development value of the project is around 1,100 crore rupees. And they've been adding on a lot of projects of late as well, and Bengaluru continues to be their focus market. They've said that South continues to be their focus. They will not come to Mumbai like other players, and this is the reason that their focus and their launch pipeline continues to be very strong. The stock, though, has come off from the highs of the day, still doing well. It's up around 1% in trade.
Very interesting, the stock doing well, but it's done very well for itself over the last 12 months as well, been an outperformer there as well. But time for a short break here on Midcap Radar. We'll get you more on the markets, and we put the spotlight on Mazgaon Dock, which is buzzing and how in today's trading session. Stay tuned, back on the other side.
Welcome back. You're still tuned into Midcap Radar, and if we're talking about broader markets, we have to talk about Mazgaon Dock. What a stellar rally on that stock, not only today, not only in past 1 year, but since the time it has listed. It's crossed 1 lakh crore rupees in market cap as well. And in just last couple of minutes, look at that surge, Harmaz. What's happening here?
It's very difficult to fathom what's happening when you have moves like these. But indeed, and at the start of the session today, the high for Mazgaon Dock was somewhere around 49.90. It has comfortably crossed that and has gone way beyond now. Almost 55 was the high that it made today. Now 1 lakh crore crossing market cap. It's now well above 1.1 lakh crore as well. So it's plenty of market cap addition. In fact, earlier last month, we put out a story that the shipbuilders, all three of them put together, have added 1 lakh crore in market cap cumulatively in 2024. This is the kind of moves that you've seen. And Mazgaon Dock, the multi-bagger that it has been, it had an IPO in October of 2020. The IPO price was 145. So 145 to 55, almost 3,300% and counting for Mazagon Dock. That's the kind of moves that we have seen. And the stock, it's not just this year that the stock has moved. It's been a steady mover all through and through. In 2022, it was up 185%, 23 up a similar quantum, and this year already 120% and counting. That number would change certainly as the stock continues to move higher, but on a valuation basis as well. Now, if you take a look at the valuation at current prices, now Mazagon Dock trades at around 41 times FY26 PE. And it's still lower compared to its peers. Now, Cochin Shipyard is already up 250% this year and counting, so it's trading at 60 times PE. Garden Reach has also doubled in the last 1 month or so, and that stock is trading at 46 times. So, in comparison, Mazagon Dock is still cheaper compared to peers, but by no means is cheap in absolute terms for sure. And when you take a look at the only concern here for Mazagon Dock is that there is no float. It's very little float in the market because the government still holds an 84.8% stake. Now, it needs to sell an additional 9.8% to be compliant with the minimum public shareholding norms. And there have been reports doing the rounds for the last few months that there is an OFS in the works. It's been going around for a while now, these kind of reports. Now, in case this happens, they manage to sell that extra 9.8% stake at today's high, they'll fetch a cool 11,000 crore rupees, the government. So the stock continues to move higher. Shareholders are happy, the government happy for sure, and there is an OFS in the works as the reports are suggesting. They are certainly bound to make a lot of money in that.
Yes, and it's very important for investors to be careful with this stock as well after the stellar rally, and no fundamentals for now backing it, the valuations being so expensive. So it's just that caution we would put forth because that stock has already seen stellar rally, as Pharma's pointed out, 5,500%, 3,300% from from its IPO price. So that's Mazagon Dock. Let's now talk about the chemical space. Now, we've been talking about how global shipping rates have started rising again. And this is something which has been hurting exporters mostly because of the Red Sea crisis. It has inflated expenses for both exporters and importers. But the IFL says that import substitution will now play an important role because the inflationary trend in product prices which are imported will make domestic manufacturers more viable, more attractive in terms of pricing as well. Companies that are engaged in import substitution in the chemical space, they will benefit from rising freight costs. Now, we've seen a lot of prices rising in terms of chemical prices. So, they have done a scenario analysis that if there is a 10% increase in PVC spreads, Chemplast would benefit 23% in terms of earnings. If there's a 10% increase in ammonia prices, Deepak Fertilizers will see a gain of 18% in earnings. For Archean Chemicals, it's bromine, which is the main product. If that price increases by 10%, it will be an impact of 9%. And if phenol spreads increase by 10%, Deepak Nitrite would benefit by around 10%. They say pricing of a lot of these bulk chemicals, it has increased. So while bulk chemical prices increase, some of these commodity names will do really well, the ones that I just mentioned. And there will also be good import substitution opportunities because the domestic manufacturers tend to benefit. So while exporters will see some pain, there could be some benefit for domestic manufacturers, and that is what IFL is highlighting now.
Chemical stocks been in focus over the last month or so, and they continue to be as the recovery starts to come in. And a lot of these names who've been underperformers for a while now. But moving back to the markets, then earlier we spoke to Ramdev Agrawal, the chairman and co-founder of Motilal Oswal Financial Services, who believes that the market could possibly double from current levels in the next 5 years. Listen into excerpts of that conversation.
Year after year, for 44 years, I have seen this market growing at, I didn't know that it is 16%, I thought it is 15%. This is a 15% country. India is a 15% country. So I have seen, I mean, like every 5 years it doubles, like from 40,000 to 80,000 it has become in 5 years, exact. So it's about 15%, and longer term is also 15-16%. So there is no reason to believe that going forward it will be anything significantly different. It might become 14, it might become 16. So if you go at 15, I mean, let's keep the base rate 15. In 5 years flat, 2029, you will be 1,60,000. Retail, which is, see, in 1.4 billion people, at least we should have 500 million people in the market. We still have only 160 billion or 100 billion. So this journey of inclusive development of the markets, because the risk capital is going to come from not from the top end of the population. Risk capital will come in a truly distributed way from across the country. And that is the revolution which is on.
Ramdev Agrawal there in an exclusive conversation with CNBC-TV18. But with that, it's a wrap on this edition of Midcap Radar. From Sonal, me and team that put this show together, thank you so much for watching. MF Corner on the other side.